All right, guys, welcome to, I don't know what to call these, a LIA member hangout, chit chat, land powwow, whatever you want to call it. It's going to be a really, really cool episode today. We've got an OG who's kind of gone meteoric, is doing big deals, and is just doing a ton of cool stuff. So I'm excited to talk to Preston today. Before we do, a couple of housekeeping things. One, the quality looks different. I apologize. We're doing this on Google Meet. I hate Google Meet, but the content will be worth it, so stick around. We just opened up last week the tickets for our Mastermind, so landinvestor.co/mastermind. I think we've already sold maybe 40 GA tickets and about half the VIP tickets. End of October, last week in October. It's going to be sick. Preston was there last year. He was at the OG one. It's going to be even cooler, even better this year. 300 total tickets, and we're going to be dripping out the guest speaker list. But there's going to be folks like Ajay speaking, like Callan, like Mayor, like just a lot of really cool people. And we're trying to mix in both like the classic land names that you know, and those heavy hitters that you don't know. Like Mayor's a good example. Guys that are just secretly crushing. And those are the hard ones to coax to come, but we've got something to come. One thing we learned last year, too much information is too much information, and that's just not fun. So we're going to dial back the number of guest speakers a tad and do a lot more interfacing, coaching, networking. I think that's like what makes it really fun. And we're going to party after if you guys want to get down with us. Number two, we've released our purchase agreement for free, landinvestor.co/PA. It's totally free. You can go stag. It's what we use on the acquisition side. In fact, Preston probably still uses that in his blind offers to this day. But I've been using for years. You guys can grab it free. And then the last thing, depending on when you're watching this, we've got about 20 or so spots still available for Land Insights. So just go over to landinsights.co. It'll take you over to all the places you need to go, and you can get our free 7-figure market selection course. Whew. All right, man, let's get started. Preston, how are you, dude?
I'm great, man. How are you?
Good. And for you guys that don't know or haven't watched the video, Preston and I did a chat. Well, it had to be over a year ago, right?
Yeah, I think about that. Yeah.
Okay. So we're not going to go over that. Like, if you guys want to hear Preston's origin story and his journey, it's a really cool story. One thing that I will say about it, and we'll put the link down below for you guys. There's kind of three people that I three buckets I create for prospective land investors. There's the folks that are committed to making this happen. They just fucking take action. There's the folks that are committed to making this happen, but they don't take action. And there's a third bucket of people which just don't even believe this is real. Yet they still watch the content with some little voice in their heads like, yeah, this is impossible. It can't be real. Preston was in that first bucket. I don't remember the exact turn time, but I remember you left a YouTube comment, which I don't even remember what it said. And then that day or the next day, you jumped in.
I think the YouTube comment was probably me more in the third bucket, and you converted me.
Okay. I forget what I even said back to. Was it a question? And what did you say?
I think my question is actually funny. I was asking, do you ever find these deals on market? Which now, full circle, I do most of my deals on market.
Right.
But
right.
Yeah, and then
so question, maybe I gave you a good response, maybe I did. I probably said no is probably my answer, and look at it come full circle now. But what was crazy is you joined sometime in the fall, and then I think 3 months later you were pretty much doing this thing full time, right? Or in December, January?
Yeah, exactly. Yeah, I think December is when I went full time. When I started, I was in New York City. I think I was like one of the second or third person.
You were early. Yeah,
which was great. Like I had, those weekly calls were just invaluable. But yeah, I was living in a studio in New York City, and then you got me doing this full time, independently doing the flip stuff. And that's when I got back to Texas, which is where I'm at now.
And now you've grown way beyond the flip stuff. So we'll talk about that here. But just give people like just a little pulse. Like, what's your life like now? You obviously moved back to a different state. You're out of the craziness of New York City. Is this something where you're like, hey, I'm just trying to grow it at all cost, and scale is the name of the game? Is it more of like lifestyle? Is it passion? Like, what does your relationship to this business look like today?
Yeah, that's a great question. I mean, I think passion is certainly the thing that I like to wake up and be motivated by every day. That's what kind of led me into the value add space. When I started, like I said, I was doing the flipping. And it really went exactly as you said it would go. It's kind of scary. It was like, dude, do the 5,000 mails a day. You'll get, 2 deals around 12,000 net profit. And I mean, it happened to a T. Yeah. And then I got to the point where I was like, all right, like this is working. This is moving. Next step is to kind of scale. Right. So I went and did all the kind of preparatory work to build and hire a team. And I was just at that point, like, do I want to bring on all these people? I'm dysfunctionally independent, and I love being a sole operator, and that kind of I kind of started looking at different options, and that this kind of brought me to more the subdivide value add space. You can operate a little bit thinner there, and there's just different ways to go about it. But that's kind of how I ended up.
Especially if you have if on market's the name of the game, right? If you don't have this huge kind of marketing engine in the business, I think it's a lot easier to run it as a solo operator. And for context here, like credit where credit's due. One, we don't really teach any value add inside of LIA. It's like it's one program to solve one problem. We were just talking about this with Preston, but it's for folks that are 0 to 24 months in, that are looking to get to 250K, 500K. I'd say like 12 to 18 months is a pretty fair timeline for most people. Small team, high revenue per employee, but small team, mainly on the acquisition side. And then to grow, there's two levers, right? It's like just do more deals and build that system out, or go quality and kind of go up market. It sounds like that's what you did. So you joined John Jasniak's Subdivide program. How many months ago? 6 months ago?
Oh, goodness. That was probably 2 to 3 months ago.
Okay, 3 months ago. And now you're all in on value add, or is it a hybrid model?
No, I'm pretty much all in. I've loved it. I've gone down the rabbit hole. Big shout out to John Jasniak, man. I know it was cool to see y'all collaborate. I'd love to hear actually a little bit about your trip out there, but
yeah, I'd love to talk about it more. Yeah, go ahead, Preston. Sorry.
Oh, I was just going to say, yeah, I mean, everything, I have to kind of give all credit to him and you for where I'm at. So anything I talk about today, a lot has come from John. So highly recommend people check him out too.
Yeah, what I was going to say too, he's got a good YouTube channel. What I was going to say too is like, he's really, I think kind of like what we've done in LIA, like we've just kind of picked out a little sub niche. John's done the same thing. And for those that don't know, it's mainly on market subdivide note wraps. And there's really no one else doing it at his scale. And I don't think really anyone else teaching it besides him. So it's a pretty cool strategy. I've always thought, dude, if you could take John's model and our model on the acquisition marketing side, it'd be dangerous. But no one's done it yet. So anyways, man, give me like the kind of, I don't know, health report, if you will, on what your business looks like today, that you're kind of all in on the value add stuff. How many deals you doing? What do the deals look like? Let's kind of walk through some of the numbers.
Yeah, for sure, man. So I actually started with kind of the LIA acquisition model with mailing, hyper scrubbing, looking for kind of the minor subdivide stuff out there. I actually had some really good stuff come through the pipelines. I passed probably on a couple really good deals because I was looking at it through a cash lens and not the note lens, which I think I would have pulled the trigger on. Yeah. I got 2 subdivides going right now. My first one that's going to hit the market is actually going to hit the market this weekend. So I want to preface that. Like, it's not like I've done a full sales cycle on these, but most of the brunt work and most of the learning is same with LIA, right? Like, it's to get to the market. Once it gets to the market, you're kind of hands off for the most part. But I have an 80-acre subdivide going on in Arkansas. I got a 172-acre subdivide going in Texas.
Nice.
Yeah, and really there's a lot of different ways people can go about and get into this. Private funding, bank loans. I kind of went the JV route. I have some really good people I've known here. I'm in Houston, down here in Houston, that have done this. Some of them are home builders that want to do more of this, but basically it was cool kind of presenting some of the skill sets I learned from you. Like, just the off market acquisition. They basically said, hey, if you bring us a deal, we'll fund it, we'll split it. And that's kind of the route I've taken.
Dude, how did you find these people? I'm sure people are going to be like, Preston, how did you do that? So how did you hunt these people down?
I wish I could say I really hunted them down. It's kind of just people I grew up with, but it's kind of, it does go back to kind of showing your value even before there might be a collaboration there. They knew what I was doing. I talked about the deals a lot. And then in some of these funders do this all the time, more down in South Texas. I'm not necessarily down there. And then it was just more of, I started, as I looked around, I kind of reached out and said, hey, could we collaborate, joint venture on this? But I mean, Kyle Bryant's a great guy. I talked to him, right? He's got some JV stuff going on. So there are a lot of different options.
Yeah, there are. And I always tell people, it's unscientific, but if you're passionate and you talk about this a lot, like somehow people find you that have money. Also, I love to ask people if they know anyone that would like to fund deals. And they always like, well, I would want to fund deals. And it's a great way to be very non-direct. Asking for money is always uncomfortable, but I like that little roundabout way. all my private money has just come from people that are kind of in my network, or maybe one layer removed. So you've got more money at your disposal than you probably realize. Dude, I feel like one thing for this on-market game, how I imagine it at least, is that like you start to own certain counties or zip codes or markets, and you know all the regs. You watch the market actively to see what comes available. Are you doing that, or are you just picking through everything in the U.S.?
No, that's a great question. I think it's an important point. I mean, for anybody that wants to jump in, kind of how I started, and also having those partners that have done deals that you can say and they can review, that helps. But I would say, man, you know, if you're in the flipping world and you want to get into this more, what's that market that you know really well? What's like your bread and butter market? And look up those subdivision regulations. Yeah, it's easy to get spread thin, especially if you go the minor subdivide route, because there's only so many products that will fit what you're looking for with the road frontage and the utilities and everything that comes with it. So that will make you kind of scatterbrained. But if you can just hone in, man, on those few markets that you really know well, I think that's the best route to go.
So are these all like plat exempt, low hanging fruit subdivisions, or are these big boy subdivisions?
So the 172 acre subdivision, that mostly plat exempt lots, and I think that's an important exit route to have, is say, hey, platting gets shut down, can you still make a deal plat exempt? We had, there's some lots under 10 acres, so we had to send it to the county commissioners, but dude, I feel like platting is like this big scary word.
Yeah, it is. Yeah.
And it's really not that scary. Yeah. All it is county commissioners kind of checking it out. And I also feel like in just regards to markets, I might give you a hot take here. I think Texas is kind of overrated, actually. Dude, everybody associates Texas with subdivisions, and I think it's because we have a statewide plat exemption of 10 acres. First of all, there's a few states with better statewide exemptions, right? Like you got Tennessee, South Carolina, Virginia, I think, are all 5 acres and up. But also, like this one I'm doing in Arkansas, 5 acres and up, plat exempt. Just look at the counties, man. Just because a state does not have a statewide plat exemption, a lot of these counties are really friendly to work in. So
it's a great point.
Yeah.
I think that, the 10 acre statewide exemption is sexy and people love it. I also think that Texas just had a crazy boom during COVID, like just beyond subdividing. And when we track all the zip codes and counties in the US, and dude, the amount of supply that's just sitting on those markets too, I think it's just been like picked over with too many 10 acre exempt subdivides. Some markets, these 10 acres are just sitting forever. So from a demand perspective, it's not that great. And then, the regulations are okay. I just think people, it's such a buzzword. So everyone just like, that's all they think about. And I will say, I'm guilty of this, bro. I'm guilty of thinking platting is much scarier than it actually. Like, when I see it, I'm like, I'll leave it for someone else. So the one that you're doing, are you platting that one in Arkansas?
No, because I'm keeping it above 5. It's plat exempt, but the Texas one was, and I think, like I said, man, platting, and that's the thing, right? We can talk about states all we want. It really comes down to the county, and I think that's an important point I want to mention too. Is like you got these subdivision regulations, right? Typically 20 to 80 pages, written by lawyers, written by engineers. Do you know who approves and disapproves the subdivisions? It's typically county commissioners. Who are county commissioners? They're just really good, solid people elected by the public. Typically good old boys. They're not scientists like dissecting everything, right? So that's why it's just a people-oriented business, man. Get to know your commissioners, talk to them, meet them in person. So I think start local. John says that all the time. I think that comes a long way.
Yeah, it's funny. I'm so the opposite of start local. I'm like, go find the best market possible. But I think that's really good advice for subdividing. Or even if it's not local, just hunker down on a market. Like just get really familiar with it. Yeah. Dude, I know you're a private guy, so I want to press you, but could you give us just some broad strokes in this? And look at those watching. This does not mean this is the amount going net to Preston. There's capital costs and shit that comes up. So
definitely. And there's improvement costs, there's utility costs. I think it's all worth getting into. The Texas one is we bought for $4,000 an acre, full cash price on the market. That's another point worth mentioning. Is like the way you tailor. Now the acquisition side is the competitive side a lot of times for getting these deals, but Yeah, that will be a dispo around 10,000 an acre. We have lots ranging from 1 acre to 31 acres. Most of them are around 10.
Okay.
But yeah, typically dispoing for like 10,000 an acre. Arkansas locked it down for 2,400 an acre. Just a few improvements, and we'll be dispoing around 6,000 an acre.
Wow. So what's the backstory on these listings? Were these mispriced, poorly marketed? Like what was the story there?
Yeah, the Arkansas or the Texas one, man, I jumped on it right away.
Yeah.
It's county I worked in, county I knew. I was actually driving up to see a property with a really nice gentleman, and that I mailed. So I was driving up. We're in this like side by side, going through the country, checking it out. But while I was up there, I was like, well, let me see if anything's hit the market. And this one just hit the market. It was like 10 minutes away. Drove over, made the full cash offer. Tailored it right. The option period, a lot of that stuff's important. Yeah. And then the Arkansas is actually interesting contrast because it's just like we love inefficiency. I know you talk about that a lot with land versus other asset classes. The regulations can be a component of inefficiency. Realtors obviously can be a component of inefficiency. And this guy, he was basically telling everybody, hey, it had a lot of road frontage, but it's been on the market forever. And he's like, yeah, man, there's just no water here. Well, I'm like, well, have you drilled a well? And he said, no. I was like, have you pulled any well logs around? He said, no. He said, I don't even think he knew he could do that. I call a weller, pull the well logs. These neighbors are on pretty good well water. So I locked it up way below listing price because it's sitting forever. Drilled a well, hit water.
That's sick, man. How deep did you have to drill to hit the well?
40 feet. So yeah.
Dude, value in plain sight, man. That's really interesting. How was the Texas one? How recent of a listing was that one, and how old was the Arkansas one? Just out of curiosity.
As far as like when we acquired it.
Yeah, no, when it was listed. How fresh or old were those listings?
Yeah, the one that was listed was like, I think we locked that down. The Texas one, like within 72 hours of it going on the market. And the Arkansas one, it's like over a year.
Wow. Just sitting in place.
They just kept dropping that price, it started pretty high. And I've been under contract with quite a few, 3 or 4 other deals that we either walked away from. But a lot of those, maybe it comes back to Texas, man. I don't know, but we're pretty fresh on the market.
Yeah, dude. Texas might be a different story, but do you find that these things go really quick? Is it cutthroat competitive, or
what? The last one I had under contract, which was 2 weeks ago, had 4 offers.
Wow.
So, but I'm not. I gotta start sprinkling in the mailing again.
Yeah.
Do some of that off market stuff.
Yeah.
But that was also, I think, we had it under contract for 105. So that's a buy box that a lot of people are getting into. I love the big, like 200 plus acres, 100 plus acres, do the hunting ranches or ranchettes. That's the stuff I like. But that's where funders really help because not everybody has that buy box.
Dude, so what's your process look like for finding or looking for deals? Is it an everyday thing? Is it when you got time? Is it structured or no?
Every day, man. John says it all the time. He says every day.
Okay.
And every day just checking it out. And that's what I would encourage people to do, man. Like I would underwrite deals for at least like 2 to 3 months before you probably go out and buy these. But like do the whole process. Like call the county commissioner, call the contractors, call the water company, which is probably the most important call, and just see like would the numbers all work, and kind of run through it before you might pull the trigger. I know I did that, and that really helped.
Okay, so you're searching every day. How many deals come across your desk that fit your buy box? Call it weekly. Is it few and far between, or is it pretty consistent?
It's really less about like buy box, I think, and what return you're looking for. I've talked to everybody. I've talked to a lot of people that have a lot of different expectations for what they're wanting.
Yeah.
Our buy price and our list price is about 100% difference. It's a double.
Yeah.
But I'm taking the approach of generating notes, selling the notes, And once you take that haircut, my returns, typically like that 60 to 70% range. John Jasniak is out here wrapping notes at 100% plus. And I've talked to people that are looking for 30%.
Yeah.
So to answer your question, I mean, it's hard to say. It's really hard to say like how many really fit that. I mean, maybe once every 2 weeks, I'd say, or something like that.
Pretty few and far between. Tell you what, that would piss me the hell off, man. I hate not being in the driver's seat. Like I just think on a personal level, it would really irk me. Now, I'd like to not spend anything on marketing. It does sound nice, but when I can't get deals, I just do more marketing. That to me, I like having the control. I'm sure you will add some kind of marketing to the mix at some point.
For sure.
Dude, on a personal level, I'm curious. You said something in the beginning. You said, I'm hyper independent. I didn't want to build a team. So talk to me about the thinking there. Is that going to be a forever thing? Or are you going to be the solo land guy? And what's the vision?
No, I think the first person to bring in is on the dispo side, actually, which is a little bit different than the LIA model. I mean, when you got 20 lots hitting the market, I think the dispo becomes important, especially to just move on and go to the next deal. And some of the acquisition underwriting is the most important part. But I mean, it's part of my personality, man. I love waking up and just being on my own schedule.
Yeah. I feel that. Sometimes I think I've built myself into a pretty prison. It's like, I've got all these people that I work with, but also it seems like they control my time sometimes. I'm like responding to messages at every hour of the day or putting fires out. Sometimes I do envy the people that have big cash flowing solo operator businesses. It's not easy to pull off. Yeah.
Sounds like you're doing all right. I know you went out to Bali and you get to travel around.
No, we've got a good life now. And I've definitely prioritized still maintaining a good life. And I love my life. I'm super grateful. But sometimes I do, it's like you bring these people in and you think, oh, I will no longer have to do that thing. And you don't have to do that thing, but now you've got to manage a person. And people bring a lot of complexity to the table. And so when you're dealing with 20 plus different personalities, even if they're executing on the thing, it's not laissez-faire. It's not hands-off. Still a lot that goes into it. But I love it, dude. To be honest, I'm a people person. I love working with people. I feel grateful to have a team. But I understand the vision. There's a guy that I follow on Twitter. I'm not a big Twitter guy, but I check it occasionally. His name is Peter Levels. Have you ever heard of this guy?
No.
He's cool dude to check out. He's not a land guy, obviously, but he builds these one-man SaaS apps. So he built one like Nomad List, which shows you like where to work as a nomad or what countries to live in. He's got one that like helps you migrate to Portugal and like how to get like the special visa. So all these like software apps, but he's just a solo operator. But he does like $300K a month from these apps. And he just keeps on building these small little apps, and they all just kind of add up. And he's just a solo one-man band. Oh, that's pretty fucking cool if you ask me. So what's?
Sorry, I was gonna say, I think it does just come back to personality though too, man. Like, it's not. I think being hyper independent and being very low risk averse. Shout out Kyle Bryant. I know he's low risk averse too.
Yeah,
I think that helps, and like but it makes me appreciate like the LIA model flipping and having just that money coming in. But you have to be comfortable, like waiting sometimes.
Yeah, I don't know. Dude, we are wrapping up a Subdivide, and we didn't get paid on it for over a year. Just like if we really think about it from start to finish, like these are not quick affairs at all. And that lead is probably in our CRM for another 6 months before that. I really think the best model is a blend of the two.
Agreed.
I think flipping to fund the marketing, run the team, you're profitable off that, and then you get these like cherries on top every quarter, every month. So to talk to me about the vision, it sounds like one day you'll have someone on your team. What are you working towards? Is there kind of like a North Star?
I love the notes. I love the note side. I know you do. Feels good to have notes coming in. So that's my goal is to build that note portfolio. How big is what I'm trying to ask myself. And then I think sprinkling in that off-market acquisition, and then I love you kind of opened Pandora's box into the land world, and I've been exploring on just like the different assets and facets of land. So I'm kind of going down the Logan Fulmer rabbit hole right now, and like maybe sprinkling some distressed acquisition side. But man, there's so many different ways. I just love like going down the rabbit hole. Like this first one.
There's so many ways to make money in land. It's overwhelming, honestly. Dude, I think, knock on wood, I was talking to Logan probably 4 months ago. He said he'd come speak at the event. So and we'll try
No
to
way. That would be
yeah,
awesome.
he's sick, man. I mean, talk about someone that's really carved out their own niche. I mean, there's no one who does. I really respect that. I've been going down the rabbit hole too. I got his course as well, although I haven't started it yet. Guilty as charged.
Okay, yeah, I got his talk that just happened in Dallas.
Yeah.
So
Did you go in person?
No, I still need to go through that. I wasn't able to make it, but I got the virtual ticket.
Yeah.
What is it like for you, man, when I know we talked about, Logan and his model, but tell me a little bit about when you went out to Texas. First of all, what do you think of Texas? As a Texan, I'm curious.
No, dude, I love Texas.
Yeah, did you what big takeaways did you have out there?
That's a good question, man. I love Texas. I've always loved Texas. I've probably been 5 times. So I haven't seen much of the state. I did drive through it though, but I still didn't see that much. I was in the car the whole time. Dude, I love what Texas. I mean, look, there's some cliches and some stupid shit about Texas. I'm not about racism or oppressing women or any of the crazy shit, but I love the general theme of what Texas stands for: self-reliance, independence, free thinking. Like I dig it, and it's almost like its own country, man. And I don't know. I just think it's really interesting. It's also such a diverse state, both in terms of people and landscapes and places. So yeah, I always love Texas. We were in West Texas, which probably is different than any other part of Texas. Such an interesting vibe out there. Have you ever been to Death Valley in California?
No.
Oh, you should go, man. It kind of reminded me of Death Valley, though, just like out on John's property where it's so desolate. I'm like waiting for a UFO to come down and land or something like that. But dude, it was sick. I think takeaways from hanging out with John. That's a great question. Dude, I think that meetings like that, where it's almost like two worlds colliding because we do things so radically different, it almost affirms what I'm good at and what I'm bad at, and makes me want to double down on what I'm good at. And I think the difference I saw, like John's probably the guy, he told me this, he's probably the guy to do, I don't know, 10,000 acres and subdivide for the rest of his life. That's just not interesting to me. I love starting businesses. Like that's the thing. And land just happens to be the vehicle that I'm doing it in currently, but I'm a business builder over anything else. And so it's like, I feel like I was swapping stories about building LIA, and he's swapping stories about building his land business, and the really nitty gritty. I think I knows way more about land, like on the nitty gritty level, than I ever do or care to know. So there's kind of like a cool like yin and yang that we had there, really kind of a different view on things. But it made me want to become a better land investor. I think that there's a great quote that I heard at Clint Turner's event. I forget who said it. Shout out to whoever did though. He said that there's 2 kinds of land investors out there. There's the line cook, and that's me, right? Build the team, build the conveyor belt, build the people. We used to do the kind of same deal over and over and over again. And then there's the chef. And the chef says, here's the raw ingredients. Watch what I make, and creates a masterpiece out of it. I think that's kind of what John does. John could look at a deal from 20 different angles, where I'm looking at it one, But the takeaway is, do I want to be a land investor forever? Hell no. I'm a builder, dude. I want to build things. That gets me way more excited. So yeah, that was a big takeaway. I mean, it's fun hanging out with people that walk a similar path to that talk land. Like land is, I'm sure you feel it. Like if you don't understand it, you just don't understand it. Yeah. And yeah, I think one of the really cool things that I'm grateful for is the people that I work with. Like Rylan came out, like one of our acquisition managers, Jordan, came out. To be able to work with people that are also friends and like do cool shit together is such a blessing.
Sure.
And that's where like having a team to me is just invaluable. Just the camaraderie, man. We go to war together every day. And I love, not literally war, but shout out to all the veterans. But we have fun. We go to battle together. So yeah, man. Have you been out there? I think you said you did, right?
Yeah, I went out to the conference in Midland. We walked some of his properties, which was really cool. And like you said, man, different approaches, but obviously y'all are both crushing it. It was interesting. Another kind of interesting thing that he sprinkled on was we stayed in a house. The conference was in a house on a property that he was subdividing, but the house was on the property. Yeah. But that's another wrinkle. Like everybody looks at just land for the subdividing world, but sprinkling a house, nobody's looking at that.
Yeah, I know. We were talking about that deal. I thought that was really interesting too, especially in Texas. How many houses on 100-acre tracts exist? A ton, dude. I think you capture a lot of the equity back just in selling the house too, which is pretty interesting. Dude, one thing I was going to say too. What was it? Oh yeah. Okay. When I went out to, this is two other takeaways, or one's a story, one's a takeaway. One, I think it's dope what John's doing with the town, but I also think he's fucking batshit crazy for doing it. It's so much work, bro. The restaurant, and I'm like, God, that just seems like such a 180 from what he's currently doing. And if anyone could do it, it would be him. But I'm excited to see how that turns out. Can't imagine wanting to own a restaurant in the gift shop. Not for me. But dude, so he has like a bunch of little houses on the property. It's like an old motel that Rylan and Jordan were staying in, and we got another buddy that was there. Back house that they stay in, and I was staying in this manufactured home. So I think it's the first or second night I was there. I fall asleep. It took me a while. I was like tossing and turning. I fall asleep. I must have been like 3 or 4 a.m. I hear someone jiggling the door and trying to get in. And I was like, what the fuck? And this dude walks into my room, pitch black. So I had no idea what it is. I'm like, I jump out of bed. I'm like ready to freaking scrap with this guy. Dude was an exterminator. He was killing bugs at 3 a.m. I tell John the next morning, he's like, oh, yeah, dude, I forgot to tell you that guy is coming over to exterminate at 3 in the morning. And I was talking to one of the family members that was there, and I guess they had another dude stay in the house a few months prior. Same shit. The guy came in at 3 in the morning. The guy pulled a gun on him.
Yeah,
bro. I mean, if any man is ready to throw down, you got a stranger walking into your bedroom, and he comes in, he's fucking exterminating in the closet in the room. I'm talking, he's having a conversation. He's like, "So man, where are you visiting from? You enjoying it out here?" They're just making small talk with me. I'm like, this is
that's so dangerous. That's dangerous. That's a dangerous time to do that in West Texas, man.
Yeah, I was about to say, everyone's strapped except me. Yeah, very courageous. We went out to Del City as well. Have you been to Del City?
No, it's pretty tiny though, right?
Pretty tiny. It's pretty interesting though. It's definitely worth saying. What's that mountain? Mount Blanca, or what's the big mountain in West Texas?
Well, I mean, there's a few. So
it's the biggest one. I think it's the biggest mountain in Texas. Can't remember the name. But it's beautiful. Guadalupe, that's right. That's the background. We were going to go hike it on Sunday, but it was like 60-mile-an-hour winds. It was snowing up there, so we ipsnapped that. But I want to go back and hike it. All right, man. Where do you want to go from here? I mean, I always like kind of riff, and I feel like I interrogate people. Yeah. But I'm down to kind of volley back and forth.
Yeah, no, I mean, I think you said John knows the nitty gritty, like about a lot of the land stuff. I think that's an important point to mention. Like, and he has a really good relationship with an attorney. He's gracious enough to filter some of that information down to us. But people at the last LIA conference, people were talking about like staying in the game.
Yeah.
If you don't know the nitty gritty, like some very important things, this is a kind of a high leverage game where you could get knocked out. Like if you just miss something. Like if you close on a property, right? I know regulation just passed here in Texas about like water feasibility for wells. A lot of people in our group have been talking about that. That could, I don't know how much that's necessarily going to cost. I mean, maybe between 10 and 30 grand, but if you close on a property, it doesn't pass the water feasibility test, all of a sudden, it could get a little dicey. But there's certain regulations that you got to think about that you never think about with the flipping stuff. Just because you're getting it at such a good price, you're turning it, but like even driveway spacing, like based on the highway miles per hour, all this stuff. That's why I kind of encourage people to do the underwriting and like do the processes before you just like dive in. I just think that's an important point.
Yeah. I found, I think this is why I've gravitated to the like rural recreational flip business, because you can be so much lazier on your due diligence. But it's like, I think infill lots and any kind of development, like the due diligence is way, 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 way deeper. And that's stuff I'm still finding. Yeah. And that's why like for Subdivides, we probably passed on deals that were viable, but just taking the low hanging fruit, the 3-sided road frontage, exemption game. But I am looking to get better at it. So I'm curious, it's probably going to be related to water utilities, but if there was something for people to pay attention to, what would be the number one thing on that list?
Yeah, obviously number one thing is water. The electric stuff's pretty straightforward. I feel like you see more consistent pricing between like $10, $12 a foot. I know we're getting credits for every lot we create, which will really cut that down. The water stuff is where I've seen pricing vary, especially talking about water line. I mean, I've seen it from $6. I mean, we're doing the one that we're doing in Texas is like $5-$6 a foot, which is really cheap compared to what I thought it would be. But that can go a lot higher. Sometimes you got to take it to a water board for them to split the cost, or it's like crazy. But I think an interesting wrinkle that can be make or break for doing deals that other people won't do is, let's say you read the subdivision regulations, right? You go below 10 acres and you need a paved road. What a lot of people don't talk about is you can still go to that county commissioner, and this all depends on the person, on the place, the county, everything. But that's why it's nice to kind of hone down. But you can go to them and say, hey, if we get a road maintenance agreement, I know the regulations say this, but can we do a road that doesn't meet those regulations? We'll maintain it. We won't give it to the county. Yeah. Sometimes they say yes, and if they say yes, that can open up a lot of opportunities.
Yeah. Yeah, I'd say the majority of subdivides that we've passed on have been because of the paved road requirement. There was some other loophole. I've heard this one. There's another loophole that a realtor told us about to get away with it. Can I forget what it was? But I was in Wilson County, and we would need to cut roads in, and I don't know what it costs for what you've underwritten, but $80 a linear foot or something like that for a paved road. It almost breaks any
paved road.
Yeah, it's just so expensive.
Yeah. I think get higher than that too.
That's great.
A lot of cases. It all depends on the work.
Yeah. Are you cutting any roads into your properties?
No, not yet. Which is, I think, a great way to start.
Yeah.
But that's something I've looked more and more into, and just building those connections, man. Once you get a good dirt work guy, good surveyor,
yeah,
the commissioners, it makes it harder to want to bounce around. But a road guy is somebody I don't have yet.
A road guy. Never thought I would need a road guy. So we're talking about adding marketing back into the mix. I mean, you've done mail, you know how to do it. Would you go back to mail? Would you cold call, RVM? I mean, is there anything else you'd add on?
I think I like the mail. I think you probably want to move to like more of a range offer with this stuff, just because it can vary so much. And I still think I'm really interested in the undivided interests, the distressed acquisition model, learning more about that. I think one thing that is also worth noting that I've learned more about is the note side, like knowing what's a marketable note, knowing what return a note investor might want. You got to offer them a higher return if you make it easier on the buyer to buy the lot, right? Like the no credit check, little down, then you're gonna have to give that note investor a higher return. Yeah. That's I remember when at least when I joined, we would talk about notes in LIA. It was all I feel like a lot of it was like getting your principal back within 24 months and something.
12 months.
12 months.
Yeah.
I do think like generating a marketable note and selling the notes another aspect that I think a lot of flippers could probably incorporate. What do you think?
I do. I think for the model that we followed, like how we built our note portfolio is different than how I advise someone to do it now. So we use all contract for deeds, which people buy those at stupid discounts, low down payment, like no friction for the buyer. And these were like low intrinsic value properties, right? So yeah, they just weren't really sellable. I mean, you could sell and just be like in 50% of what they were worth or something like that. Nowadays though, we do deed of trust and we put it on our standard flip properties. And I think it's 50-50 for keeping them versus selling them. We still have only sold one note. But I think for people inside of LIA, you're crazy if you don't have owner financing terms on every property. And I think for most note buyers, you can tell me what you've seen. I would get 15 to 25% down, 10 to 11% interest, 5 to 7 year note. I think most note buyers are pretty open to buying those things. What have you seen?
No, I think that's a really marketable note. Obviously, the higher the down payment, the shorter the terms, the more upfront work really helps. What returns would you feel like that kind of note would generate for a note buyer? Like what? How do you?
Yeah, I'll tell you at a discount what we would sell those at. I mean, I think the upper echelon. Look, I've only sold one note. I should know that with the discount we sold it at, but I can't remember. I want to say it was like we sold it at 65% of what it was worth. The highest I've seen on paper that someone was willing to pay is 80, but it's like almost impossible to get them to pay. Like it had to be like the most cherry pick. So I think like getting 70% of a note's value is pretty fair. But I think as you build better rapport with these note buyers, they start buying volume from you. You can probably get better terms. But if you're selling one-off notes to note buyers, I think it's an area that like funding, JV funding is kind of gotten a little more efficient and like equalized in this business. I mean, it used to be 50-50 just a few years ago, but notes are way behind the times. I don't know what is that roughly what you're saying?
Yeah, I think it is. I think for people that are thinking about generating and selling notes, Obviously, there's Paper Stack, probably the number one note exchange. You can go on there, man. Look what is pending, how people are marketing them, what returns investors are looking for.
Yeah.
I do feel like I feel like more people are looking into note investing just as an alternative investment.
Yeah.
And I think the returns are going to get higher for people that are generating and selling the notes. I think it's only going to go up.
I think, note buying is obviously popular in the single family world. And I think people are starting to wake up and say, hey, there's an opportunity in land, there's an opportunity to buy notes. I think it's still a few years out till you see kind of like how JV funding's become more efficient. I think we're still a few years away from that. How are you finding note buyers though? Is it Paper Stack? Is it networking?
Yeah, it's networking. And I think it's great. Like, man, if you have a note buyer lined up that will pay for these at closing, and you know exactly what he's looking for, just tailor the notes to that and sell them off. That just kind of goes back to that subdividing is really people oriented business.
Everything.
And the other thing I was thinking, man, I'd be interested to hear your thoughts on this was, okay, so a note buyer only wants a note 10 years. 10-year term is typically the max, right? Yeah. That also limits your buyers in a sense. Like a 30-year note would be way more attractive to a buyer. Mm-hmm. Your down payment goes down dramatically. I want to go down the rabbit hole of like hypothecation and doing these longer term notes and borrowing against the notes. Have you heard or talked to anybody doing that?
No one doing it at scale. I talked to Jay Chakonsky, who was in LIA, and I think he was hypothecating for his single family home note portfolio. I thought about doing it. I forget who I was talking to. It was probably 2 years ago that they were going to buy like 12 months of payments from me or something like that. I don't think it's a bad idea. I don't know. I've never seen someone offer a 30-year note. That would be pretty interesting.
That might be dramatic, but
that's pretty extreme.
You know what I mean? Like, or just like, if you have collateral in notes, essentially taking a bank loan out against that.
That would be my first option. Go take a bank loan against it. Do you have a pretty big note portfolio now?
No, I don't.
Lending against? No,
I don't. Now, when these subdivides change, or when we start selling these off, I think that will change. But I got a lot of people say just keep the notes until you need.
I know. Funding. I'd love to keep them.
Yeah,
I know it's different when you got people funding them. But are you going to keep some and sell some, or sell all?
Man, I would love to keep some just to cover just the overhead. There's still some overhead here to cover them, and then. But if you have that note buyer lined up, man, you can sell them quick. You might as well keep them until you have that next project, lined up. That's how you started, right? Didn't you do a lot of notes to begin with?
Yeah, that's pretty much all. I'll tell you the quick elevator pitch. So started with flipping anything, bro. I knew zero about land. I was flipping landlocked, fucking weird properties. Second year, like the first 6 months, started JVing bigger properties. And then snowballed that capital into building a note portfolio. And I think from April to December of that year. So I think April I probably had like $2,500 a month in note income. And by December I was at 20K plus. So I built it in 8 months essentially to over 20K. And I was just going ham on selling notes and buying small deals. We were picking up like portfolios and parceling them out. And we still every year add 10 grand a month to our note portfolio, but it's very much like a side piece for us, it's not a huge part of it. But I love notes, dude. I love notes. And I think it's giving me the ability to think different, knowing that every month we've got guaranteed money coming in.
Yeah.
Such a blessing.
Dude, where are you? Like if you have 40,000, let's just call it 40,000 a month coming in on notes, right? That's hefty. You can do a lot. You can do a lot with that, especially if there's, a lot of years left with those returns. Where are you trying to go, man, in your business?
In the land business?
You get that question a lot.
I do, and I think the answer is always kind of disappointing, to be honest. Well, I don't know the full answer. Like there's like my journey, like anyone else's, there's always things that you can't predict, and you zig and zag, and you look back like, how the fuck? Honestly, I'm pretty content to grow the land business slowly. I think it's like I've always been in this mindset of scale at all costs, and it's just taking a toll on me. I think trying to do that in 3 businesses has become really difficult. So we still want to grow the business. Yeah. Well, really what I'm focused on is revenue per employee. So kind of smaller, more assassin-like teams, less complexity, making it more hands-off. Like I want to kind of gravitate further and further and further away from the business. Really, my goal is to be like a private equity firm where I don't buy businesses, I start businesses, and I bring in CEOs. And so I want to rise people through the ranks and let them run the company and give them profit shares and all that jazz. And help change lives, but also allow me to do what I find to be like creative and fun. Like starting businesses, it's like art to me. Like you got this hypothesis, you have fucking no idea how you're going to find the customers or do the thing or fulfill, and then you just figure it out. So that's the best case scenario. I mean, I'd love to grow the land business to where we're doing $10 million a year in gross sales, probably netting $3.5–4 million, something like that. That'd be awesome. That's still, by anyone's standards, a great business. But I don't want to grow this thing to the moon. No, it gets complex, man. It gets real complex. That we were working on.
Yeah.
Go ahead.
Oh no, I was just saying. I mean, not just that. Well, you have 2 other businesses going. So
I've got many more that I want to start. It's like it takes a lot of restraint to hold myself back. It's some in land, some not in land. I just love starting businesses. But what I was going to say is, so we talk about this all the time, right? And we were talking about at the beginning of this call, like, okay, to grow, you could do more deals or you could do higher value deals. And so I feel like I've hit the limit on how many deals I want to do. Like, I think we could raise the quality, but I don't think we're going to do more than 150 deals a year. I've done that. It's just not that fun. So I'm like, okay, let's raise the quality. Did the Subdivide stuff. I mean, I just take the low hanging fruit. I'm just not an expert at it yet, so I could definitely get better there. But I'm like, you know what? Let me try creating paper lots and entitling. We went through that process with a deal in Georgia. I hated it. I mean, maybe it's intense and it's political and it's fucking boring.
Exactly.
I'm like, this is not what I want my life to look like. And yeah, those are deals where you could go clear 7 figures or multiple 7 figures on a deal. Like we brought in this consultant who we were going to hire. We ended up hiring, but he was doing another deal in Augusta where we were at. So this one, we were going to create 74 lots. Bro, he created the paper lot Subdivided that he sold with 3,000 lots in them. It was like a $30 million deal. It's one deal, not profit, but in sales value. And yeah, I just have no interest. So I feel like I either got to do more deals or get better at doing deals. Now I am interested in adjacent value add stuff like fixing title, being a private investigator and hunting family members down. One of my favorite value add strategies is creating access. I love that's an easy play for us. But yeah, man, what about you?
Yeah, I mean, I'm still looking at the distressed, still going down that rabbit hole, the distressed property acquisition stuff. I love the exempt stuff, and I love doing some Subdivide stuff where it's nothing crazy. Yeah. The entitlement stuff is intense because you can be 6 figures out of pocket and get a no.
Yeah, which so scary.
Yeah, that is scary. I think this is kind of a sweet spot. I mean, there is some upfront money. I've lost money doing surveys on deals we've, had to walk back on, and there are some stuff, but it's nothing that's going to knock you out of the game.
No. Yeah.
So yeah, I mean, just kind of ramping up that note portfolio is what I'm working on.
Do you have like a monetary goal for how big you want that note portfolio to be?
Do you have any recommendations
for goals? I mean, look, I did it in such a different fashion, but I think that April to December case studies shows that I think adding 25K a year with that model is certainly possible. So I think you can add a lot more to it. That's for monthly than people realize. But that's a whole different game. I mean, you can honestly probably blow that out of the water with the notes you're doing. It might only take you 6, 7, 8 deals a year. I would just figure out a way to fund them. So like what I would think about is, okay, either bring debt in, so promissory notes. I use debt for our first Subdivide and just paid the guy off after a year. That's a cool option.
Is that private?
Yeah, private. It's actually a guy out of Texas. He's really weird about like connecting with people, but maybe I can connect you with him if you want. The note wrap stuff John does, obviously. Or bro, go do your first 5 Subdivides, sell those notes, go get a chunk of cash, and then just start snowballing that, And then you can go and do deals, sell half the notes, get your basis back, keep the rest, and just keep on going down that path.
Yeah.
Why aren't you doing the note wrap stuff? Being in that world.
Yeah. I think that's something I want to start doing. I think on these first, one JV, it's kind of low risk. You get a second set of eyes. I didn't want to be on the hook to pay somebody out if something went south. But now I'm getting that confidence, I think, to start wrapping.
Okay. Are you making offers to sellers with the wraps?
No, I haven't really been making offers here. I guess we did have that small one under contract a couple weeks ago, but I'm ready to get this dispo thing going, and then we'll kind of start looking around.
Why not just partner with amazing realtors?
Yeah, no, I mean that's on this Arkansas one. I think we will bring on a realtor, but it's still just about getting some of these sold off before raising more money to go do some more stuff.
No, but you're talking about bringing in an internal dispo person.
Yeah, no, that's something I was thinking. Well, the interesting part about the dispo person, a lot of these guys, man, are obviously selling their lots on Facebook and other different alternative channels that we, I don't do normally. Like I know a lot of the stuff's on the MLS. I'm still totally open to doing the realtor side.
Yeah.
I just think that would be maybe the first hire, or just more of like a general VA, I guess.
Yeah. I mean, having done both, have the big dispo team and using realtors more so now, I'm eating my words because I used to shit on realtors. I think it's a better model for most people, not for everyone. Depends on what your aspirations are. At a certain point, it just makes sense to bring it in-house. But if I were you and you want to use those alternative channels, if you're owner financing lots, like you can crush on Facebook and land.com and stuff like that.
Yeah.
Well, we just didn't get very many cash sales there. But General's VA essentially is like a setter, warms up those leads, qualifies them or pre-qualifies them, and gives them to the realtor. And I just find like getting boots on the ground, as you know, for properties is how you sell the thing. And it's really difficult to get a dispo person in the Philippines to get someone to walk a property or do it correctly, And you're doing higher price inventory. So
yeah. Do you cap like the commissions? Like, would you work with the realtor at 8% or higher?
It depends on the realtor. 8% super, super rare. It also depends on the price point. So if I'm tossing them a $25,000 listing, I'm more apt to give them a higher percentage. Once we get into the 6 figures, 5 points, 4 points. And like we only use a few realtors. So we bring them volume over time. So they're usually pretty negotiable. I said we typically for our first time listing start at 6, 7 points and work our way down from there. But they always try to hit you with this 10% nonsense. And we make them do all of the drone photos. Inside LIA, you'll see our drone photo SOP that like outlines what we want. You give it to them, they do the drone photos. And if they can't do the drone photos, they're not the right realtor.
Yeah. Another thing I think that's just worth mentioning real quick is, dude, a lot of these regulations, I know Oklahoma's like this, a lot of states, as long as you keep them between 4 or 4 parcels and under, you're exempt. Yeah, that's a great place to start. And that's also could be a different business model, just like tracking more around metropolitan areas.
Yeah.
Dude, buy a 10-acre lot and split it into 4 pieces.
There's no size requirement minimum.
I would need to double check Oklahoma, but to my understanding, correct.
Yeah, I mean, there are, for everyone that's watching, there's states, I mean, it's usually either a size thing or it's a quantity thing, or sometimes it's both. But I think they do exist where it's just a quantity thing with no size requirements, which is crazy. Or minimums.
Yeah, that's actually a lot. Like I see it a lot in the Midwest. I don't know. Yeah. That's out there.
Kind of baller. Dude, there's so many little ways to subdivide land beyond what everyone thinks about with the whole 10-acre shit. And it's just like, and there's so many states that are actually pretty good. I always talk about like Republican red states are pretty good places to look.
Absolutely.
Bro, so you're running this solo operator. What tools are you using? What tools do you like live and die by? And then I'm just curious what your day-to-day, like what's your day-to-day look like in this business?
Yeah. Well, there are different tools. I mean, a lot of these tools are state specific.
Yeah.
If it's the state's semi-functional, like the well log GIS is massive. Like know where the aquifers are in the state you're operating in. And then there's other GISs that like I can look at water lines, I can look at railroad lines, I can look at pipelines. Like these are all the different factors you got to think about. Outside of that, man, still using data tree, still using land ID.
Yeah.
But just, go down the GIS rabbit hole for the Subdivides stuff.
Okay.
And man, my day-to-day looks different every day, I guess. I mean, I still spend 20 minutes a day just like tracking my markets. I'm on the phone a lot. Like now that we have these Subdivides going, I'm talking to the surveyors, contractors, like every other day. I'm always on the phone, just kind of nudging these people along. And that's that's the two things you got to keep in mind when you're doing this is when you underwrite it, it's always going to be more expensive. It's always going to take longer.
Yeah.
And that's what I'm learning.
Yeah.
But yeah, it's like I'm a project manager now is what it feels like, which is probably I'm sure it might feel similar now that you've scaled and you have your team, but just
I'm a people manager. It's a little, people are more complex than projects, unfortunately.
Yeah, probably.
But yeah, there's definitely parallels there. Do you do anything cool with the freedom, or are you just kind of like you working like a dog?
Oh yeah, no, it's great, man. I'm ready to have some of these properties during hunting season.
Yeah,
turkey season's going on. I didn't get it out to Arkansas, but like there's props there, which is nice. And then I'm about to go to Europe for a bit.
Nice. How long's a bit?
A few weeks. Weeks.
Sick.
Maybe we might extend. I haven't been out there in years. But that's just the nice thing, man. Is like, I don't have VAs or anything to answer to. Yeah, and that might change. Like, especially I'm married. I don't know, man. When you have kids, maybe you're just locked down and you're like, let's just hire and build. I don't know, or maybe you don't want to do that. I don't know, but I'm enjoying it while I have it.
Yeah, it's so personal, man. It's so, I mean, like life and like land and like business, there's not one way to do it, and you really can design it how you want. I do think at some point you need some form of leverage in any business to grow. Leverage could be through more capital, it could be through media, it could be through code, it could be through people. I've kind of chosen the people route and the media route, but at some point, if you really want to grow exponentially, I think you need something like that. Because like the problem is at a certain point, you got to break out of that one-to-one relationship with like what Preston does is what Preston gets. So it's like, how can we create some leverage where Preston does 1 and Preston gets 10? Like that's what I think. And there's a lot of ways to do that. It doesn't just have to be through hiring people.
Yeah.
When are you going to be in Europe? I'm going to be there in September.
Oh man, I'm leaving in like 2 weeks.
Okay. Okay. Are you going to Portugal? Ryland's like temporarily living in Portugal right now.
Is he? Dang, no, I won't be down there. I'll be kind of down towards the Mediterranean. Like I'll be in France and Italy, but I'll have to hit him up, man. Yeah,
you will. He might hop around, so he might be on the move. But I know he's doing like a surf trip out there for I don't even know how long, many months. And that's
so. Are you locked down until September? Are you hanging out in Vegas or?
No, we always got a lot cooking. So it's my birthday on the 27th. So I'm gonna go to Japan for a couple of weeks, and then we come back, go visit family. It's my sister's birthday, so I'm gonna go back home. And then Sarah and I are moving back to San Diego for the summer, so like June, July, September. We're going.
She's moving back with you.
We just go back for the summer. We just leave Vegas.
Oh, okay.
We just go rent an Airbnb for like 2 months.
Nice. September,
one of my best friends is doing it. So funny. He's doing his honeymoon and all throughout Europe, but he's bringing all of his friends on the honeymoon. So we're going on that. So we're gonna go to like England, France, Italy, and then Croatia. And his wedding's like a week before that in our hometown. But dude, what's crazy is in December, looks like I'm moving. And it looks like I'm moving. You want to take a guess? Where to?
You're moving to Texas, man.
No. Way off. I'm moving to, let's say we're moving to Indonesia, to Bali.
Full time.
Full. I mean, yeah. Full.
That's what I mean. Like
home base. Home base. Will I live there forever? I don't know. We just hired a relocation consultant. Dude, I love it. I love it, bro. You gotta
tell me. You gotta tell me how it was when you're out there. I know you're just up there.
It's so good. I could go on. There's so many points to make. What I will say, just like nuts and bolts. One, so it's a Hindu culture, deeply spiritual, deeply religious, and the people are so nice. And I think it's because of that. I don't know. Just the kindest people. Everywhere you go, everyone's giving you a full tooth smile. They're so happy to see you. Karma is obviously a big thing. So people are so respectful and high integrity. Like everyone, drop your wallet on the ground, someone's gonna chase you down and give it to you. America's missing that integrity, man. Like our values are all fucking out of whack here. The expat scene is super cool. So it's all like very alternative entrepreneurs, fitness people, just a really cool group. So you like dope local community and then really cool entrepreneur scene. And I just do the lifestyle is just more aligned with what I want. Like, dude, I'm a grinder. I love working hard, but I need to be in an environment where I also get called to do things that don't involve work, And so like, it's just a lot going on. I can go surf, I can go hike. There's always parties and shit happening and cool people to meet. And one of my big things, we were there for a month. And I had a dirt bike that I was riding every day. And I was like, you know what? Wherever I live, I need to ride a motorcycle every day because it makes me so happy. And it's so scary to ride a motorcycle in the US. So yeah, man, I think it's just cool to change it up. The biggest roadblock for us, we have to get our dog there. We got this little English bulldog. So she's got to fly separately. We can't fly together. She's got to go under the plane. She's like a delicate little thing. So she's got to go to Jakarta, which is the capital. She has to quarantine there in this room for like 7 days. And they ship her on a boat to us in Bali. So that's the hardest thing, man. Like, it's definitely scary to.
Yeah, that's a little different.
It's like moving a kid, you know? Yeah, we're nervous, but that's why we got the consultant and they're kind of holding our hand through the process. What's that?
Do you have a crib? Do you have a crib picked out?
We are looking at houses right now. So we're either, for those that know Bali, we're either going to do Canggu or Uluwatu. We're probably going to start in Canggu. It's like a little more happening. Make friends, and Uluwatu is like the surf town. Bro, we're about to be living like Tony Stark. I mean, these houses are crazy. All glass, 6,000 square feet on the edge of cliff. Like, dude, this is mental. And I'd be paying the same thing I'm paying for rent here. You know, it's like, I mean, we're not going to save money per se, but you can get a stupid house there. And actually, I'm opening up an LLC there. I'm going to start buying most likely Airbnbs or even developing. So you can't buy as personally, I can't go buy there. So you can do like long-term lease, but if you start an LLC in that country, you can buy, and the Airbnbs they just crush. Like, we talked to this guy there. So, you know, Colton from LIA, Colton Bones. I don't know if you ever talked to him, but he joined us out there at the end. We had one of our first employees, Newman. We flew him out from Pakistan, so he was there for the first week with us. So sick.
Was that your first time meeting him? Like in
first
person?
Time? Yeah, first time. Which is so weird, man. Like, to work with someone for so many years, and like, I was nervous. It's like meeting someone you've been dating or something. But he was staying at this Airbnb, and so you lease the land. So 25-year lease on the land. He said it was 30 grand for 25 years. That was the total. Then built a little bungalow on it for 45 grand, whatever, 30,000 divided by, 25 years, whatever that is, $1,000 or a little less than $1,000 a year. 45 grand to build it out, rents for $300 a night, and it's 70% occupancy. So you do the math.
So you like clearing that? You're like clearing your 30-year term for like 1 year?
Yeah, it's crazy, man. Crazy. Maybe even less. I mean, I could honestly be a third of the year if you 100% occupancy, I guess, but theoretically, but $9K a month or something. So yeah,
sounds like you gotta do a LIA Mastermind out there or something.
Well, so this is what's interesting, dude. We're talking about at the beginning. Everyone that's expiring LIA that's in their 12 months is like, hey man, what's next? Like a third of the people renew month to month, and the rest are like, all right, what's the next thing? And I was talking about the mastermind at the beginning. I'm like, if I were to do a mastermind, this is the format I'd want to take. And someone steals this, fuck you. But no one would steal it. It's too hard to pull off. So max of 50 people broken down into groups of 8. Every group of 8 has a counselor, and it's like business therapy almost, but like life investments, dealing with success, like all that. And then everyone presents monthly. So it rotates. Like, you might present in January, I might present in February. You got to put together a talk about what's going on in your business to present on it. Mm-hmm. So like less of a coaching and more of like a collaboration of just high level people. You got to be doing over $500,000 a year. And then we do one US meetup and then one Bali meetup, and that's all included in it. I think that'd be sick.
That's a great size too, man. That's perfect.
50. So it's still a group where you can interface lots of people, but you're in these pods of 8 that's more intimate, which I think 50 altogether is too chaotic. But when we meet in person, you want that 50, And I think for higher level groups, like the whole like just coaching at someone, like just blabbering at them is good for beginners. I don't think it's that valuable once you're higher up. I think it's more valuable to share and to have like this merging of ideas. And honestly, there's two things that I want. I personally want that. I don't know if you've ever felt this, or maybe you will feel this. Like, sometimes I just want a fucking business therapist, bro. I just want to vent, talk about the good, the bad, the ugly, what I'm dealing with, taxes, this, that, and have someone to guide me through that. And I've yet to find that.
I dump that off too much on the wife, probably.
Way too much. I really try to watch myself on that. And my girl's an entrepreneur too, but like, it just becomes a work fest if we talk too much about it, So.
Not sexy dinner conversation.
Like, I know. Yeah, man. Wow. Yeah. What? Just out of curiosity, like, does that sound relevant to you, or like, hey, this sounds more relevant? Do you have any advice on that feedback?
Criticism? I think that's. I love that idea. I love the size, and LIA, like I said, man. I mean, that was like a trampoline. Forever indebted to everything y'all taught me. I think what your biggest differentiator in this kind of realm is like it's a business. It's almost like a business model instead of just like learning the basics, man. The way y'all talk about scaling and building a team, I think that's where you can. I'm sure you're aware. Like that's not everybody's doing that. Most people aren't. But dude,
on that,
it's invaluable. Dude, masterminds are invaluable.
They are invaluable. And I think the best masterminds, the best events, whatever it may be, it's invaluable through the collaboration. Because there's a shit ton I could learn from you, a shit ton I could learn from other people in that group. And that wouldn't just apply to me, it would apply to everyone else there. And I think sometimes when it's just a guy blabbering to a bunch of people, it's like you lose that potential for new ideas. And I think that works in the beginning. Like always our stance for LIA, the way I've thought about it is how do I build like a franchise model? How do I make it so prescriptive? And I think we've gotten even better at that since you started with us. Like, how do we make it literally a business in a box? So it's just like bang, 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 do this, and you're pretty much guaranteed results. That's why we rolled out a new guarantee for LIA, which is 6 figures in pipeline and profit in 12 months. We'll work with you until you hit that. So a guarantee on 6 figures in pipeline profit, which is pretty fucking bold.
Yeah, man. And that's what's dope, especially with y'all's event coming up too, is like honing in that model. But when you bring in other people too, to kind of just look at all the opportunity, look at the different models, that's like a great value add too.
Are you coming out this year?
Definitely.
Yep. Hell yeah. We're going to be a little more on the strip this year. So,
what? We're not going to be in the same spot, man. I feel a connection. I ate at every restaurant. Like,
you're like in a random strip mall or something like that.
That was impressive what y'all pulled together even last second, and I think it was year 1. Yeah, you had that turnout.
Yeah.
So what's the number this year?
So 300 people this year. Which I mean, look, I don't think there's ever been a 300 person land event. So it's ambitious. We might hit 250, 240, 260. I mean, what happens is you sell out a majority of your tickets, over 50%, 4 weeks out from the event. So it's hard to forecast. I think we will sell out most of them. Yeah, it's really weird. People are just procrastinate. Like you really see.
I'm gonna get mine today. You have my word.
Okay, there you go. You just see people kind of procrastinate. And then not everyone shows, right? So you might sell 300 tickets, but maybe 70% show. I would love to hit that full 300, but we're just going way crazier with it. Like the experience or the amenities, like last year was going to look janky in comparison, and it's a horrible business. I would never get into the event business, but it's just purely for fun. Like it's not for profit at all. It's so, I don't know how people make events profitable. Dude, what would you say to someone that's watching this? Like either words of wisdom, inspiration, or maybe again a prescriptive game plan that you feel like would work for someone starting? And look, it does not have to be related to what we do. Like what would be your words there?
Yeah, that's a good question, man. I mean, I think about the business you want, build it in that direction. Like it's cliche talking about your why, but that is like the foundation. Yeah. And then if it's intimidating, like you don't have to go all in at once. Yeah. I certainly didn't do it. The subdividing stuff. There's ways you can like put your foot in the water, your toe in the water, and get involved without going head first. Yeah. And honestly, going head first is a good way to get in trouble if you don't know what you're doing. And then leverage your relationships, man. Like forever thankful to you and a lot of these guys I've met through you and these other groups too, man. Like that's wouldn't be here without it. So
well, brother, that people always say that, and I'm very, very appreciative, but you also had the hardest job. You fucking put rubber to the road, so you can never discount that, right? Not everyone does that. And you had blind faith. I mean, you went all in, and you went all in quick, and that's a skill that not everyone possesses. So give yourself kudos. Certainly well deserved. So I will say too, I love diving into the deep end. I think value add might be the one place where I'd say do not. Like you can get yourself in hot water really quick. Yeah. Flipping a little bit less so. So good advice there. Now in terms of a strategic game plan, let's give a little more color. Let's say someone is more seasoned, they're not totally green, they want to go do their first subdivide, but on market. What's your prescription for folks there?
Yeah, dude, go to where you know the market, like know your dispo. I use Land Insights for that. Shout out Land Insights, man. That's really helpful. The Facebook demand test is another interesting thing, but minor subdivides are great, a great way to get going. And then be patient. Like it's almost like a poker game. Like only put your chips in if you really feel confident. It's okay to walk away from a deal. But that's the nice thing when you're seasoned. Like you've seen contracts, you've seen the process, and you should know a market at least very well. That's where I'd start. It's easy, man. It's with the minor subdivide stuff. Now the prerequisites that you need to get into it, like we talked about, to look all over the place. When you look all over the place, you close on a deal. You've never worked in that county. They don't have water, or there's something weird. I mean, there's even in Texas, man, there's certain counties like Liberty County, for example, like really hard place to work.
Yeah, I've heard that.
Yeah.
Dude, I'll keep it kind of hush-ish, but we're working on something in Land Insights that will probably be out in the next year. So like what we're working on right now is all the scrubbing capabilities. So we've got it for landlocked, which I'm sure you're not using because you're not marketing, but we're adding it for flood zones, wetlands, and you can kind of set a tolerance for how much you want, topography, weird shaped properties. We're also doing it for ownership records you wouldn't want, BLM, schools, whatever. It'll automatically pull that out of your data. But we're working on inverse searches too. So it could say, hey, find me states, counties, whatever maybe that have friendly subdivided regulations. Find me properties that have at least this much road frontage or road frontage on multiple sides. You can even match it up with aquifers or water table, or however you want to do it. So they can do an inverse search and pull all the subdivided candidates, which is pretty fucking crazy. And then you can just go and snipe on those things. I'm curious, dude, why aren't you cold calling these leads? I mean, do you ever like just pull lists and just start ringing these people?
No, what I'll do is, I mean, if I'll mail people, I'll mail the neighbors. I mean, dude, there's so many in Texas, at least, man, there's so many stuff always hitting the market. It's actually pretty crazy. All the different stuff that's moving. And I've found opportunities there with that thing y'all are rolling out. Like how would y'all go about quantifying like friendly regulations or how would you
it'd probably be it'd be on a state level, and it'd be a relatively simple search just in terms of finding the states that have the exemptions that we like. So I mean, probably really just layering every red state or the Tennessees and South Carolina, things like that. So I don't know, a county I might have misspoke. County becomes a little too complex to weigh in on.
Do you think we could pull all the landlocked properties if we wanted to? Like, would there be an inverse to that? You think?
You already can. So when you landlock scrub, you have the option to export the landlocked or the clean records. So if you want to go attack the landlocked, you get that data, which that's a fire setup too. And I'm going to tease one more thing. We're working on something with landlocked, or if it's landlocked, but it's within X distance of a county road, which we know getting an easement would be pretty easy. We can just pull that data. So show me landlocked with 50 feet away from a county road. Those are slam dunk easement creation property. So
like you could make a whole, that literally could just make somebody a whole new job. Like,
dude, facts. I mean, you could become excessively wealthy if you do that long enough. Because, dude, I find that landlocked properties, like sellers understand it with like broken title and stuff. They don't always get it. When we buy those landlocked ones, literally 10 to 20 cents of what they're worth, and we can just get that on like an option contract or double close, create the easement, and then we can sell it. And if we don't, well, we're not really out much. I'm out maybe $500 earnest. I think it's a fire strategy. No one really talks about it. It's probably my favorite value add strategy, but it's a pain in the butt if you're manually scrubbing that. So yeah, if you guys upload a data set, Land Insights, you can pull the clean ones and then the landlocked ones as well.
Like in Arkansas, they have to give you access. And in Texas, you can like
suing the state thing. Is this what you're talking about? Like suing the state for access or some shit like that?
I don't know who you sue. Maybe you sue the neighbor. Like in Texas, at least, like if you can pull old surveys, you find the old parent track, they have to. Yeah. That neighbor has to give you access. There's all these different ways. Dude,
this is where my land ignorance comes out. But I've heard that in so many states. It's like legally you have to have access, but you still have to sue. And I think it's probably 20, 30 grand in a legal bill. And I don't think it's a guarantee, but I think the strike rate's pretty high. Actually, Logan Fulmer, if he was talking about a deal, I forget what it was, but yeah, it was like some monster multi-six-figure deal where he sued the state. I think it was the state of Texas. I think I could be wrong here, but yeah, it's a really interesting strategy. I love landlocked stuff. Do you want to end here? Or do you want to keep on riffing? You got anything else you want to go over?
I think we covered a lot, at least the notes I made. I mean, just know your regulations, know your utilities and the costs. I mean, we could get into the specifics, but
bro, do you think you'll ever do another flip, or you done?
No, I think there's no reason I shouldn't be getting out at least 5,000 mailers a month. There's really no excuse. it was just kind of like, this is what I want to learn about. This is what I wanted to do. Put on the blinders and go in. But now I'll roll that out, dude. It's nice to have that money coming in. You know,
It is.
when I started, I was still selling off inventory, so it didn't feel like it. I pretty much sold it all off at this point. And it's like, all right, kind of miss that actually.
How many like standard flips did you do?
Last year I did like 25. I mean, it was like it was exactly what you said. I mean,
Yeah. How much marketing did you do?
oh man, was it like 40,000 letters? Does that math work?
That math works. That's a good
Yeah,
deal.
I think it was about like 1,800.
Good
1,800.
deal. Wow.
I did the manual scrubbing. I did Betty,
Yeah.
which I actually like, but
You did what?
reworked REI, the Betty
Oh, what is
scrubber.
that? It's wait, we got competition. I didn't even know about this. Man, what is this?
Oh, this is, dude, it's been around. I don't know how long it's been around. You upload the list and they run AI and they'll like run it's just like the likelihood of that individual selling. So you don't know about this?
I don't know if I've heard about it with rework. I've
Okay.
heard about this though. It's like the predictive based on a bunch of factors. I've heard it's not that accurate. What was your experience?
Yeah, man. You hear all different kinds of opinions on it.
Yeah.
I cross-examined it. Like I mail the whole thing and then see, my seller's like what rating it actually is.
Okay.
I think it was pretty dang accurate. I think it was accurate enough for me. I mean, it cut my marketing down like 30%.
Okay.
You can really just you can cut as much as you want. I just cut the really bad scores. But I mean, they were pretty accurate predicting that typical seller model, like how long they've owned it, credit score, where they live. It'll give it ranks it each person individually. It gives it a
Wow.
score.
I mean, dude, your yield 1,800 letters for a new guy is really freaking good in their first year. So maybe that does speak to it. This is called rework AI. What's this called?
Reworked, like past tense, reworked REI.
Okay.
Yeah.
Reworked. That's really interesting. How much did it cost?
They charge you based on how many rows you want examined. I think I did like 5,000 rows for maybe $250 a month or something like that. I stopped paying it now that I'm doing this, but I don't know what what their rates are now.
Yeah. Who is this for? Like just let's say it's solar, Amazon, insurance for everyone. Land investor.
Yeah. I think it started with land, because the way this company started, I actually talked to one of the founders. He was a land investor, mailed a guy. I think it might have been in Castilla County. I know it was somewhere in Colorado. But the guy that he mailed was a product engineer, and was basically like, "Why are you mailing me? I just bought this property. Like, I'm not." They collaborated and started.
Bro, that's awesome. Well, shout out to Rework AI. It's a really cool idea. I have not heard of them, but I have heard of others that are doing this whole AI like lead scoring thing. I mean, the rates are fair: 289, 8,000 rows, 16,000 rows, 429. I might try it. How many? I guess how does it work? So it scores a lead, and then you remove anyone under.
Yeah, it scores at like anywhere between like -100 to like maybe up to 300, 400. They recommend you only mail 100 and up. I mailed all scores 60 and up. And man, I actually tracked all my sales and what their Betty scores were. Even before I started using it, I like ran it back through. I mean, I think my average score was over 100.
For every seller you worked with.
Yeah, on average, like if you average them all out. Yeah.
Wow.
And I had some that were maybe like a score 30 or 40 or 50. But most of them were over 100. Yeah.
What was the median?
I don't know the median. I mean, it was pretty dang spot on though, like for the most part. But like people talk about, I mean, it's hard to gauge somebody's motivation and timing. Like I can understand the criticism, because you just don't know. But it's also with the amount of mail it cuts out, I thought it was worth it.
So it chops out 30%, or you were only mailing 30%?
I was chopping out 30%. If you go out with their recommendations, you're probably cutting your mailing list in half.
Wow.
Yeah, it's pretty cool, man.
This is really cool. I got to check this out. Yeah, it's interesting. I mean, what we're doing, what they're doing is ultimately to increase your ROAS and get better return from your market, but two totally different routes, which is, I thought this was for like landlocked. Like we do the physical.
Well, for sole operator, this is great. But
great idea.
When when I was using it, it didn't do the landlocked stuff.
Yeah.
So
Yeah.
what y'all are doing is crazy, man. I don't even know how y'all that's even possible.
It's pretty hard. I'm not going to lie. They got a lot of really smart engineers working with us. I mean, what's cool too is that like any business, you just grow it through cash flow. So we just keep on reinvesting to build better teams, engineers, better product, better user interfaces to kind of keep on doubling down. I mean, when did you sign up for Land Insights?
Oh, I got it for free at the event, man.
You and Jesse Evans. Okay, so you got it when it was still on Tableau, right?
Yeah.
So like, I mean, where it started from to where it's at now is just a fucking ridiculous difference. But yeah, we just keep on snowballing to make it better. But I'm not gonna lie, the scrubbing stuff is really, really complex. I've got this thing that, bro, I wish I could show you. I could share. I got it pulled up right now. I don't know if I should share my screen in this video, but we've got this thing where you plug in, it'll run a full comp report on any property, plug in all the DD, pull all the realtors, sell-through rate, tell you what you should offer, max allowable offer, what it's worth. It's fucking crazy, and it gives you all the DD you would need, everything with DD. So it's something that will be added in.
And it will tell you, it'll be like what it's worth, what you should offer.
Yeah, so we got an algorithm that kind of follows our comping formula, tell you what it's worth, tell you the offer range, max allowable offer. And I mean, look,
kind of cross-examined it, like
my team. So this is still in beta, but we opened it up to our team this week, and our team's been using it. I would say when we were cross-referencing with old deals, I mean, it's probably 80% accurate for being on the money with pricing. The tough thing is, of course, comp quality comp data quality is variable. And so we can't really account for some of that yet. I mean, if machine learning could look at like the images and stuff like that, it'd be a little easier. So I find on like markets that are really thin on data, it's not perfect, but it's a great jumping off point. And it automatically aggregates every sold comp. So you can go and spot check them. And I can show you the age, days on market, the distance from your property, days on market discount based on how long it's been. Like, there's just so many things.
See, this is the thing though. This is the way the world's turning. Like the art is just becoming a science. Is what it feels like.
Yeah, here's the thing though.
You're the one that's creating it and driving the value, but like for the regular guy, I'm just like, I don't know, man. It makes me nervous a little bit.
So there's two things. Guy, I wish I could share this. I'd love to get your feedback. Maybe we'll give some folks early access. But there's two really important things. One, I think that market selection, pricing, it's always been an art and a science. That's bullshit. It should just be a science with a little human oversight. You know, it will always be an art though, and you said this multiple times, is the people side of this business. Everyone says it's the sales and marketing business. I think this is just a sales business. I don't care how you get a lead in the door. Hopefully it's profitable and it's from a source that you can kind of consistently roll out. But all the magic happens once you start talking to people. So that like, you could be the smartest cat and have all the tools, but if you suck on the phones, no shot. But we do kind of want to level the playing field for some of the stuff is just stupid how outdated it is. But we do have a cap on Land Insight, so it's not evergreen. So we will cap the users, because I mean it would take a lot of users, but you could see how maybe it could degrade the value if you got too many people on there. But yeah, so it's changed, man.
It's the best tool in land, honestly.
I appreciate that.
I've looked, there's some other competitors I've poked my head around, but I love y'all.
Oh yeah, well, they used to be in our group, and we've got an open law thing going on, if you will.
Okay.
So, all right. There's a low blow, and I imagine we're talking about the same person here, but yeah, kind of unfortunate. I mean, I think that there's always kind of a first mover advantage. I just think that because we're so deep in this land stuff, we have a little bit of an edge for what to develop next and how to build things that makes like the most sense. Like I think a lot of you get software developers that come in and know a little bit about land, but they know more about software, where I think we're really land centric and just know a little bit about software. But I think that works in our favor because it's so land specialized. But it's one of those things where it always still feels like it's a piece of shit. Like it still feels like it's like, because I know what we're working on in the background and what it can be and will be, that it always feels not as good as it should be. But it's a great tool. I mean, it's saved us innumerable hours every week. I'd say probably 40+ hours every week. And then
yeah, go ahead.
Well, on a market selection pricing side, yeah. And the scrubbing is, again, that's hard for me to even way more with scrubbing. It's almost impossible to quantify. But the crazy thing is the stats from members. So we've got people that went from 10x ROAS to 15, 20x ROAS after these, because we're just finding these honey holes that are so off the beaten path that they're not picked over at all, but they still have really high demand. They're like, people come in this business and they have a bias, and they're like, I'm gonna go look at Texas. And so you only look at markets in Texas because that's your initial bias. So we're finding the weirdest places that I would never guess to work in that are just like honey holes. But the craziest thing is the days on market. Like we've seen folks go from like 60 days on market is their average for their business down to like 15, 17 days on market just for things better. And that's crazy if you can compound your capital. Dude, the other stat too, we've got multiple people that are over a 1% response rate from their mailers, where they were at like a third of a response, the percentage, and it's because the pricing's so accurate now. So yeah, dude, it's a tool that pays for itself just on the time savings alone, but when we stack all the additional benefits, it just gets crazy. I love it. We use it every day, and I feel like that's
it almost makes it like inexcusable, at least for somebody like me, to just not be rolling some mail out, just like using that hands off. Like
I know,
huh?
Sorry, go ahead.
I was just gonna ask how it's been like personally building that versus the lead, like more the personal land model. Like
well, dude, this is the stuff where I feel like we've all got like you said, you're much more passionate about the value add stuff than you are about the flipping, right? I think like the you made it moment in life is when you can do something that the world values, that pays you well, and that you feel like you've got gifts to go and use. I think like when that all working, it feels good. And that's how I feel. Like I love this, and it's not just me. We've got an amazing team. Kyle, who's a LIA member, Rylan, who used to be a LIA member. So I get to work with people that are kind of in our world. But yeah, man, I love it. I mean, this is what gets me fired up. I just love not knowing how the fuck to do something, like creating a piece of software and then just kind of figuring it out. So my heart's way more in this stuff than just flipping land. Now, in terms of how does it affect LIA? I mean, my not my number one responsibility, but LIA definitely comes before Land Insight. And we've got a great team that kind of runs the operations, because if if LIA isn't doing well, Land Insights isn't going to do well, because it's predominantly used by members. So that is kind of like takes precedence over Land Insights. And then really to some extent, the top of the rung is still my own land business. And I think I do a pretty good job balancing LIA and the land business and making sure that we always deliver. But I don't want to be one of those guys that teaches and doesn't do. And you see a lot of that in the real estate space. And it's not for me to judge, but I don't want to be that guy. But my heart like the passion I feel is in building things way more than flipping. I've also just been flipping land for a while. There's something to be said about novelty, right?
Yeah, that makes sense.
Yeah. But yeah, still humming along in the land business. I mean, the cool thing is like we've been at it for a while. We've built a really good team. We still have problems. We're always fixing things and the shit always breaking. But I feel like we've really shrunken our team size. Everyone's super accountable. They own their shit. They're killers. And it's a well-oiled machine. So it doesn't require more than 10, 15 hours a week from me. And a lot of it is coaching, meetings, leading, things like that.
Do you have as somebody that's seen as many flips as you, do you have one you could just provide of like, what's one that's like gotten you excited recently? Or does that even happen anymore?
Oh, no, I still get excited about deals. I mean, I will say like some of the flips kind of meld together, right? Dude, I'll look at just the contracts that we've sent this week and see. Okay, let me pull this deal up. So this is a funny one. Let me see when this lead came in. So this is a lead. Her name is Diana. We've been working this lead. When did this originate? This originated in November 2022. Okay. We've been working this lead relentlessly since November 2022. And we probably have 300 phone calls logged, probably 500 emails, and who knows how many texts, right? This is a subdivide in the county I was telling you about, in Wilson County. It's the one that we're having issues with access, or not with access, but with cutting in the road. It has to be paved. Right. Then, so it's 5 sisters that own it. One of the sisters passed away. We've been millimeters away from closing on this thing so many times. One of the sisters passed away. We're kind of giving them breathing room. She just came back to us today. They're ready to go. This isn't like the coolest deal ever, but I'll kind of walk you through it. So this is actually going to be a double close now. Sent them a contract at $900K, $1,000 earnest. We finally got word that she's ready to sell. She's going to be reviewing it with her family. This was literally sent like at 11 a.m. this morning. And then on the dispo side, my team says, in my opinion, this is a safer play to double close, and we can sell the idea of the development potential to the property without actually tying up our money in the deal. We know there'll be high costs to develop roads, need to subdivide, we could do flag lots, but they get pretty ugly. And we got a quote from our realtor on this one at 1.3, like pretty guaranteed. We got a great realtor out there. So double close, $1,000 at risk, $400K of spread. That won't all be profit. It'll be fees and realtors and all that jazz. And this isn't like the craziest, coolest deal ever, but I've been working since November 2022, dude. I love, though, no deal gets me more fired up than I see my team and I just grinding it out on these sellers.
Yeah.
And I think that's the work most people aren't willing to do. And that's the power of having a high performance acquisition team. So that one's cool. There's another one that we just sent a contract on. We actually are selling, so that entitlement deal we're doing in Georgia, bro, we could do a whole podcast on that one. Ended up flopping. We had to flip out of it. We to make it profitable, we'd had to double the lot count to over 140 lots. We found out a way to do that without rezoning it. We need to increase the density. Like that's like the obvious one. But in Georgia, there's something called a 40% open space rule. So if we leave 40% of the land open, we can actually double or cut the size of the lot by half. So much smaller lots. And we were already at like 30% open space. So it didn't really require much for us to do that. Problem was that it increases the traffic state. That's going to increase the number of cars on these smaller roads. We'd have to have a main road off of this like larger county road. So there's a vacant lot on that county road that connects to ours. So we just start cold calling this guy. It's like 4 months ago. Start cold calling guy. We get him on the horn. He's down to sell. It's actually, that property was listed at like over 400. We got him down to 205. He was ready to rock. We were inking that thing up. He was going to give us a really long due diligence period. And we were going to use that for access. And that was going to allow us to double the lot count for our property, which would have made the project probably worth 1.6, something like that. We're buying we would have been all in on all 3 lots. There's 3 properties. We all in on all 3 lots for about 530. And then one of the lots we weren't going to entitle, and we could sell that for like 50, 60K. So we got 50, 60K back immediately, being the deal for like 490, and it's worth 1.6. And we had everything already drafted up, all the sketches done, initial meetings done with the county. Fucking the final hour, the seller backs out, says, you know what, my family and I have changed their mind. And this is the linchpin on this deal. And I've already got the tens of thousands in the engineering stuff, right? And yeah, man, we started shopping this deal around at 74 lots. No one was interested. They were like, the price was way too low per lot. The lots were too big. For some reason, they didn't want to develop on these bigger lots. They're like, no, we only develop on whatever 5,000 square foot lots. So we just got an offer on it yesterday. We're selling it to a power company. We bought both of them. There's 2 lots. We bought for 335. We got an offer for one of them at like 447.5, and the other one will probably sell at 60. So not a great deal, but like just a crazy story. And this has been yeah,
man.
And that's what I realized. I hate entitlements.
Right. Especially when it hinges like that, man.
Yeah, I know.
There's just it's a high stakes game, but dang, when the reward is great when it works out. But that situation's tough, and it probably happens more often than people would like to talk about.
Oh, for sure, dude. I think it's got to be. I mean, it depends on how good you are, and like your underwriting gets better. Obviously, you don't make errors like we did on this one. But I think 25% probably flop. And you're just like, you're playing kind of like a venture capital game where like the 75% makes so much money, but you got to be willing to lose 6 figures, potentially multiple times back to back before you hit one. And I don't like deals where like the control is in someone else's court. It's in the neighboring lot. It's in the city. Like that's the utility company. It's just so many things that go into them.
Yeah.
So we have another one, funnily enough. It's a rezoning play in Alabama that we sent the contract on this week. So we got that one at 800. What's interesting is it's got an appraisal at 1.4, which seems kind of high because like nothing is selling it that much, but it's like unzoned essentially. So we need to annex it in and zone it higher density. It's probably worth like, I don't know, 1.5 to 2 million at that point if it is rezoned. But the guy's giving us a year on the contract and we're only putting 5,000 down for earnest. So we'll take a swing. Yeah. So we've been doing a lot more of those deals. So just like a little more on box. Yeah. And it's like, it's a happy medium on the value add. The risk is a lot lower, but we can still add value through some creativity. So yeah, man, yeah, a couple fun ones. I love seeing deals come through that are old as hell. Every month we get a deal that's at least 2 years old. And that's like when people come into LIA and they're 3 months in and they freak out because like they sent a mailer and it didn't work as well as they thought it would. But the other ones that they sent were perfect, but they had one that flopped. They're so hung up on it. I'm like, dude, this stuff pays dividends. You just really don't know when it takes a while. Do you still get leads from your first mailers?
I just got one this week. Yeah. It's actually a landlocked place. So I'm trying to figure out how much I'm going to offer. It's like 10 acres landlocked, but the road's right nearby. But I'm still working. I have one entitled from an early mailer that was over a year ago, and we just got a title. So those are definitely the most gratifying ones.
Yeah. Dude, that's awesome, man. Well, I guess I'll definitely see you at the event in October. Are you going to that land mastermind in Colorado in June?
That's when I'm going to be in Europe, man.
Oh, okay.
Yeah, I know.
Well, I'll definitely see you in October. Maybe we'll do a little meetup before then. Who knows? But dude, it was a treat, man. I always say this, but I like doing these postmortems, checking in every couple of years or once a year and just seeing where you're at. And yeah, thank you, man. I appreciate you. I see you occasionally chime in the group, and it's always cool to see folks paying it forward. So I do appreciate you helping out the young folks and these people that graduate from LIA and like are in it for a year plus. That you guys kind of become like Hall of Famers. Like you don't realize it, but there's a new cohort of people that look up to all the OGs, and so I think it's important for people to see that.
No, man, I'll keep chiming in, and I would love to do this again. You're the reason I'm in the space, man. So whatever you need, I mean, I'm always appreciative, man. So
of course, man. Well, hey, give yourself some fucking credit. Like, not look at every month, 70 to 100 people schedule calls to join LIA, and 15 people join a month. So you do the math, right? A lot of people are scared to take a chance on themselves, and I only want to be around people that will take a chance on themselves.
Sure.
So kudos to you, brother. All right, guys. If you like this video, I don't know, like it or something, maybe leave a comment. Hey, Preston, if someone's got a value-add deal and they want to partner with you, what's the best way for them to get in touch with you?
Yeah, shoot me an email, preston@ruralacres.com. We'll be happy to check it out. Shoot me a message on Discord. Yeah, man. Happy to take a look at anything.
Boom. All right. Appreciate you guys. We'll talk soon.
Man. Bye. See you Sumner.